dollar hegemony is granted to us by the fact that OPEC has always sold oil in U.S. dollars, but that's ending right now. And with the agreements we've talked about already in place between Nigeria and China, and Saudi and China, and Russia and China, and now India has just struck up a deal with Russia, a rupee-ruble exchange program for military. You are beginning to see the dollar lose its world reserve status, period. And that in and of itself, I believe, will be massive.
Here at Liberty and Finance, we're licensed brokers with Miles Franklin. We are standing by the inventory, ready to make sure you get what you need, even into the wee hours of night and on weekends, because preparedness doesn't stop. Call us 1-888-81-LIBERTY. That's 1-888-815-4237.
Welcome back to Liberty and Finance. We're delighted to have this returning guest. Andy Schectman is the CEO of Miles Franklin Precious Metals. He joins us for this weekly market update today, Tuesday, April 26, 2022. Andy, thanks for coming back on Liberty and Finance.
Always good to be here, Dunnigan. Thanks for having me again.
Our viewers look to you for insight into what's going on, not only in the broader world and geopolitical financial markets, but also in the internals of the precious metals retail supply chain, and your insights into what's happening on the ground is of high interest to all of them who are wondering, is this the right time to make their move? Should they wait a little bit longer? Have they already missed the bus, etc.? One question that keeps coming up, it came up again in viewers' questions submitted during our Ask the Brokers live session last week, and that is about concerns of to whom owners or holders of precious metals will be able to sell in times of high and volatile prices. And I've tried to clarify to people that reputable large dealers like Miles Franklin are always standing ready to buy back metals. And the prevailing concern, there are several, but one of the prevailing concerns that keeps coming up is, gee, when the prices get that high, there won't be any dealers that have enough cash to buy what we're trying to sell at that high of a price. So can you please clarify how that process works and why, maybe alleviate some of their concerns that Miles Franklin, for example, won't have enough cash to buy their metal when the time comes?
I think it's a valid concern. There are a lot of dealers where that will be the case, where they are not liquid enough and they don't hedge to offset risk. For dealers that are in a position to hedge and have enough liquidity, this won't be an issue at all. In fact, because of the ability to hedge. But there will be small coin shops and intermediate-sized dealers who don't hedge their position, who are overextended. It will be an issue to a degree. To a company like ours, it won't be. We have the ability to, worst case, hedge it and melt it down. You'll always get melt value for it at very least. Where we're heading, I think, quite frankly, it will be far in excess of melt value. But at that point, what you'll have is a narrowing of the players who have the ability to provide two-way transactions, to provide liquidity on both sides of the table. And it centers around the ability to offset that risk, to hedge it, to be able to purchase it, even if you have to purchase it with credit, hedge it, and then offset that risk by actually melting it down with the refinery, or getting it, like, for example, a lot of the metal that we have that we melt down, we will melt down into raw bars and send them to the Royal Canadian Mint for credit. So there's always a willing buyer. There's always a willing seller in this example. But the pool of willing buyers or able buyers in that environment will decrease. You will then, I think at that point, be forced to work with larger companies like Miles Franklin or some of the 4 or 5 biggies in the industry who hedge, have relationships and enough liquidity to be able to do that. So it's a fair question, and it will impact to some degree, some of the players in the industry. It won't impact us, and it won't impact companies like APMEX or JM Bullion or the big ones who have both the ability to hedge, refining capability as well, and the relationships to be able to move that metal to refineries or willing parties that will always provide the other side of the trade no matter what the price is, no matter how high it gets. There's always going to be a need for gold and silver, and if you have the ability to hedge the risk, it won't be an issue.
Another thing I've noticed is more and more clients are choosing to pay by bank wire and ask for what is in stock for immediate shipment. There have been enough disruptions in the supply chain and shipments getting delayed, et cetera, and frankly, just concern about the potential for a big spike in civil unrest or anything any day now, week after week after week, that people are just not as comfortable letting their orders hang out there for a long period of time, and many of them are simply interested in getting their fulfillment as soon as possible. One question that arises around that is, why is it necessary for them to pay by bank wire? What's the difference in the big, approximate 9 or 10 days savings in delay for clearing time or settling time of funds that a bank wire provides rather than, say, electronic check, ACH transfer?
In theory, they both clear relatively the same amount of time. An ACH will clear your account in a day. It's going to be a little slower than a wire, but the ACH represents a good deal of risk to the establishment like us. So imagine the tables are turned, and you are going to sell a car that you have. You put an ad in the paper, and Joe Smith comes to your house with a personal check for $44,000 to buy your car. Are you going to take that check and say, "Here are the keys," and sign over the title to the gentleman, if it's a personal check, and rest well at night knowing that check is indeed going to clear and it's not fraudulent? Of course not. You have to give it time to clear, and the same thing is true here. And in particular with electronic checks. So people need to understand that the routing and account number on the bottom of your check is not proprietary information. That's on every single check you've ever sent out into space. So someone captures your routing and account number, you pay for it at a restaurant, and someone takes a picture of it, or you're just opening your wallet at the grocery store, and someone snaps a picture of your routing and account number and tries to call a precious metals company and process it via an ACH. We have to allow that 10-day clearing time for the safety, not only of us as the person who's relinquishing the metal, but also the consumer who could be the victim of identity theft. So what it really is with a wire is it's the removal of identity theft. It's pretty darn hard to get into someone's account, go to a bank, say I'm Dunnigan Kaiser, provide the identification, assuming the bank branch doesn't know me or know you, and then get them to wire funds out of your account. That's near impossible. But it's not near impossible to steal someone's routing and account number and try, if you will, to process a transaction through e-check. What is e-check? It's giving us your routing and account number. So what it really is just time to provide safety to both ends of the transaction, whoever is remitting it and whoever is, in this case, us, who is sending the metal out with the anticipation of it being good funds. So, ACHs can be clawed back if they're fraudulent. So if we send out metal to someone, they say, well, my ACH, it cleared my account 3 days ago. Okay, fine. But, if it wasn't the right person and we did send the metal out, we have very little in the way of recourse when that person says this is fraud and that money gets clawed back. So it is our standard protocol to wait 10 days, 7 business days on any check or electronic check transaction. With a wire or cryptocurrency, it's instantly cleared, and that really is the delineation.
We also get recurring questions about, we mentioned about people interested in the future strategy for a sellback, anticipating that there may come a time when they want to access some of the liquidity that some of their savings essentially that they've stored in metals, and wondering what a typical timeline is for them to receive payment if they do decide to sell back in the future. Two different scenarios I think would be appropriate. One is if they have the metals in their possession and at the time would want to send them in to us for inspection, validation, and payout. The other timeline would be if they had had these on storage in the vault at one of our storage facilities and wanted to get paid out as quickly as possible. What are some realistic timelines on either of those two scenarios?
Well, if it's in the vault, look, it shouldn't take more than a few days. Anytime you have something in a segregated vault, first of all, the metal has to be transferred properly through the protocols of filling out the paperwork, the transfer forms, and then it has to be inspected. So that takes a few days under normal circumstances, and depending upon which one of the vaults that the product is in. So in our Canadian vaults, we're actually able to pay people within 24 to 48 hours max now because of the way that we have things set up, where the metal gets taken right out of there. They don't have to have it shipped back to the States, and we can pay immediately. If it's in our U.S. vaults, you would think it would be the same thing, but sometimes it's not. There are a few of the vaults, in particular Los Angeles and Miami, that where we have, Miami in particular, where we have really the only relationship there out of any company in the entire country. So we don't have quite the same liquidity there. We have to sometimes ship it out of there in order to inspect it properly back to our main hub in North Dakota. In general, if it's in storage, it should be no more than just a few days to a week, with the exception of Miami, which might be a week to 10 days. If it's shipped to us from wherever, you have the mail time, of course. We can assist with UPS, but at that point, it also has to be checked in as an incoming parcel and then opened under camera and validated for authenticity and correct count. That's going to add a little bit of time. Look, the bottom line is this. It's never smart to wait till the 12th hour to send your metal back for a payment that needs to be paid yesterday. It's always best to give yourself a week to 10 days lead time to guarantee that you make your payment on time. I'll say this, precious metals are incredibly liquid, but in the volume that we see these days, our staff is taxed, where we have 2 8-hour shifts now doing a lot of work in our vault in North Dakota, and incoming and outgoing. And so minus the check-in time, here again, it would be immediate. You add the check-in time, the mail time, the validation can add 2, 3, 4 days. In general, should never be more than a week, never more than 10 days on any of these transactions. Quite frankly, it should be much quicker than that. But under this environment that we find ourselves in now, week to 10 days is a good place to put anything here in the United States. In Canada, no more than 48 hours will have funds to people.
I think one of the variables that we have no control over in this environment, and certainly not in the future environment, if there is more civil unrest and chaos and that sort of thing, is the shipping time. Even though the methods of shipment that we use are highly reliable, for example, USPS registered, I understand they use that for nuclear and medical and crime evidence and stuff like that, stuff that really takes sign-offs and locked custody along the way and stuff like that. But in our case, the timing can be slow on that method of shipment. And if people are concerned about the potential for increased disruption going ahead, can you talk to us about the trade-off they have of using, strategically staging some of their assets in the vault so that they could prepare for either our swap or a sell back, a buyback at a times of when there may be civil unrest going on?
That's really smart, actually. All of us have learned to expect the unexpected these days. So if you, for example, know that you're going to be building a home and you're going to use a couple $100,000 worth of your metal for the down payment on your new construction or whatnot, having that sent to the vault 60 days prior, establishing a storage account would be a very prudent way to remove that risk, to have one less thing to worry about. It's actually a very, very good idea. I find very often people wait till the 12th hour and then they get angry that, well, why hasn't my funds been sent yet? Well, if I were honest, I'd say, why'd you wait so long to send it in? And why are you pushing it this close to the edge? So that's a great idea. Look, since I used to publicly say we'd never lost a package for years, I would say that up on stage. And since 2020, there have been disruptions with FedEx, with UPS, even with registered mail. Packages go missing. Insurance is always there to cover it. Investigations ensue. But there is variability in shipping. That's what insurance is for. And you don't want to be screwing around with that at the 12th hour. If you send a package and even though it's fully insured, it goes missing, and you need a payment in 48 hours to build a house or you're dead in the water. So good point. One that I think is very reminiscent of your background in preparation, and to remove the variables leading up to something very important like a tax payment or a home payment or whatever it may be is a good idea.
It reminded me just now when you said that times that we've traveled internationally, or especially if we've ever gone on a ship, we never flew the day of when the ship was going to leave. The old saying, "The ship has sailed," is something we did not want to hear when we were standing on the dock. So we always would fly the night before, at least, sometimes 2 nights before if we wanted to see something there, but at least the night before, to be in the city ahead of time so that if there was a flight delay or you got bumped or whatever, you would not have any concern that you weren't staging yourself right near where you needed to be at the time of go time.
It's smart. And with how fast things are changing globally right now and the ramifications that will have ultimately on the efficiency of services, and it's not just going to be supply chain problems. If things get as bad as a lot of people think with the dollar, you'll see inefficiencies in services. And it's not a bad idea to get ahead of these things. I think it's rather smart, to be honest with you.
We've answered this one before, but I wanted to hit it again because it keeps coming up, and that is people who have existing retirement accounts, whether it's an IRA, 401k, 401a. There's all these different plans that are qualified retirement plans that are able to be rolled over into a self-directed IRA. They're looking at the difference to them. And again, I always tell people we're not tax advisors, but here's what in general terms we know about the difference between them setting up a precious metals IRA as a traditional IRA versus a Roth IRA if they're concerned about the potential for future capital gains taxes. Assuming that metals are going to go up a lot in nominal price, some people are really concerned about having to hand over a lot of that gain in a nominal gain in capital gains taxes. Can you clarify the distinction for people between traditional versus Roth IRAs in precious metals IRAs?
Yeah, well, I mean, the money that's inside of your IRA doesn't belong completely and totally to you. Uncle has a claim on a portion of that and will get his pound of flesh no matter what. And so that's one of the things that people sometimes don't think about when they look at their IRA statement is that, yeah, well, great, but that's all pre-tax money. So when you talk about rolling a traditional into a Roth right now, it's really not a bad idea. It's painful, and you have a big tax bill to bite off. But if you believe taxes will go higher and metal prices will go higher, it's a great idea. And I think when you see what's happening around the world, when you see what's coming out of Fed Chairman Powell's mouth, when you see countries around the world really de-dollarizing, I think it it bodes well for that type of a move to expect taxes to go higher, to expect metals to go higher in the face of a falling dollar. I think it is not a bad idea to switch to a Roth that would enable you then to sell down the road, no matter what the profit is, with no tax implications. And, to me, the whole reason to own a precious metals IRA is for the distribution feature, the ability to distribute it in kind. And if it's in a Roth, you take your distribution, you pay no taxes, no matter how high the profit is, and it's very efficient. So yeah, here again, really good, sound advice that again is very preparatory in nature, in the respect that you're preparing for an event where taxes go higher, the underlying investment goes higher, and the likelihood of having to bear the brunt of that in capital gains taxes that probably go higher as well. Not a bad idea. I guess I should back that up and say there are no capital gains taxes in an IRA. It's regular income. But nonetheless, the point of it is that income taxes are going to go higher along with the price of the metal in the face of a falling dollar. And I think that's really all but certain. And, we're seeing an acceleration in the de-dollarization out there that will exacerbate the rise ultimately in the price of the metal. Even with our allies, the Bank of Israel just announced that they have pared down their exposure to the US dollar and to the euro and increased it to the yen and the yuan. So we're beginning to see even our allies start to de-dollarize, not just the Indias and the Russias and the Chinas and the Saudi Arabias and the Nigerias and many of the BRICS countries. We're beginning to see it amongst our allies, which ultimately, to me, speaks of a dollar that will continue to lose value and a Federal Reserve that will have no choice but continue to print to keep the game going, which ultimately will lead to that type of a scenario where metals go higher, where taxes go higher, and to nip that in the bud and pay the taxes now and bet on the come, so to speak, that you're betting that your investment direction is correct. Yeah, switching to a Roth right now is a very good idea, but it's also one that comes with pain because you're actually selling the traditional, paying the taxes, taking the proceeds and moving it to a Roth that from that point forward is tax-free, the appreciation.
I guess one more question along a similar vein is people wondering why their traditional financial planner is not recommending to them to buy gold and silver. I had a couple of clients reach out to me in the last week, asked me for any documentation that I could help them to provide to their financial planner or the fiduciary who's in charge of inheritance that they're under, that sort of thing, to help them understand why this is a prudent thing to do for anyone who's managing money. We certainly have interviewed Michael Pinto, the founder of Pinto Portfolio Strategies, and he has a model that looks forward to all kinds of different trends, inflationary, deflationary, et cetera. And he's right now at the maximum of his variable, typically 5 to 20%. He's at 20% that he's recommending to his clients to be in gold, for example. And there's also the Ibbotson study you've talked about before. We're getting more information on that. We put that, in fact, I was going to mention to folks, if you email us at libertyandfinance.com and just put gold study in the title of the email, we'll send you a link to where you can find out the Ibbotson study, which was done. And Andy, you can tell us more about that because you're the guy that informed me of that in the first place. But where can people get more information about that their traditional financial planner is not telling them about why it's important to include gold in their portfolio?
It's funny, I'd ask them a question. I'd say, or her, Mr. and Mrs. Financial Advisor, can you tell me what makes the dollar the world reserve currency? And if they can't answer that question, that's all you need to know. And it's funny, Dunnigan, I find lots of people don't know the answer to that question. And if you ask it, the answers you get range from fairly astute to ridiculous. And the real answer is the protection of the Saudi kingdom. And the dollar hegemony is granted to us by the fact that OPEC has always sold oil in U.S. dollars. But that's ending right now. And with the agreements we've talked about already in place between Nigeria and China, and Saudi and China, and Russia and China, and now India has just struck up a deal with Russia, a rupee-ruble exchange program for military. You are beginning to see the dollar lose its world reserve status, period. And that in and of itself, I believe, will be massive. You got a lady named Loretta Mester. She's on the FOMC committee, which is the Federal Open Market Committee. And she just got through saying it will take several years to get inflation under control. You got the Fed coming out and saying this, that it's going to be years before we get things under control. The reasons to buy gold and silver are extremely important. So number one, I would suggest and submit that most advisors don't even really know the reasons. Yeah, they see inflation and they understand the correlation there. But the real reason to de-dollarize and to own precious metals is far deeper. And to me, it centers specifically around the loss of the petro status. Fed Chairman Powell came out a month and a half ago and publicly said there's room for more than one world reserve currency. He is acquiescing to the fact that we will be challenged for singular world reserve status. That in and of itself will create massive inflation as dollars come home and interest rates rise as a result, which will negatively impact stocks and bonds. And so when you look at a traditional 60-40% allocation of stocks and bonds in people's portfolio, it's going to get negatively impacted. If your advisor can't answer that simple question right off the bat, you're asking the wrong person this question. But the real reason is that when I was young in this industry, they weren't called financial advisors. They were called stockbrokers, and they made a percentage of every trade. And so they didn't care what you were buying. They made a percentage if you bought and if you sold. And now, when the internet came around, I started Miles Franklin before email and internet. And so it was different. But when the internet came around and Scottrade said, well, we'll do those trades for $9, the stockbroker became a dinosaur and they became a financial advisor, which is a test that's about 100 questions on how or how not to screw somebody. That's really what it is. It's a test on ethics. And the Series 7 is a tough test to become an advisor, to become able to trade stocks. The test to become a financial advisor is very easy. Not a certified financial planner, the CFP. That's a 3-part, 3-year test. That's the real deal. But a financial advisor is what everyone is nowadays at Edward Jones and at these shops that people go into seeking advice for investments. So they're now an advisor. They're paid by keeping money under management. So, if they're going to recommend precious metals, if they do have an inkling, it's going to be something like GLD or SLV or index funds that index, junior mining shares or stuff like that. For them to recommend physical gold, none of the brokerages sell it. So they're going to have to recommend that they take a portion of that money out from under the umbrella and send it to a company like ours or to a gentleman like you. And that money's not coming back anytime soon, and they know that. So they have lost their ability to be impartial. In other words, they learn more and more about less and less till they know everything about nothing, and they refuse to be impartial because you're taking money out from the umbrella, which is off of their plate. This is exactly why they don't recommend it, because let's just be honest, it's human nature to be self-serving if it means taking away from your dinner plate. And that's really what is happening with most financial advisors. I don't want to paint a very broad brush stroke, but that's the truth of it. If they sold physical metal that could then be kept under management, I think there would be far greater impartiality and objectivity as it pertains to that. So, you have to realize first and foremost that the money is yours. And most of us, it's interesting. I've talked to you about this before, about being accountable for your actions. And we all are in every way. Yet most people give up that accountability, their retirement. The most important thing to be accountable for to somebody else. It's your money. And if you feel that it's something you should do, then do it. And if you're not sure, if your financial advisor understands the reasons to do it, ask them that question. What gives the dollar its world reserve status? And if they can't answer that question, you may want to think twice about who you're getting your advice from, and especially as it pertains to finding anything that is opposite the dollar. Because if they can't answer that question and see what's happening, starting with the reclassification of gold as tier 1 and everything that's happened up until this point, culminating with the Fed chairman saying there's room for more than one world reserve currency, and countries now selling or buying oil in other currencies, particularly the yuan, then you're dealing with the wrong person. And that's the truest answer I can give you, because if they're worth their salt, they will answer that question by saying, well, of course, it's the petro status and the protection of the Saudi kingdom. At least at that point, you know you're dealing with someone who can have an intelligent conversation as to why he or she doesn't think you should own physical metal. Short of that, you're asking the wrong person the wrong question.
And just to remind people, they can email us at libertyandfinance, all spelled out, all one word, no punctuation, libertyandfinance@protonmail.com, and we'll send you a free report called the Golden Guide to Investing, and it includes in there a description of the Ibbotson study that showed this protective anti-correlation between gold as a hedge against other forms of investment and the dollar. And Andy, we also look to you every week for a weekly market special to help make it easier for our viewers to start or continue increase their stacking of physical metals. And I wonder what you have this weekend planned.
So we were fortunate enough, then again, to buy from a client of ours a very large position of 10-ounce and kilo Kookaburra and Koala coins from Australia. They came to us from Singapore, a storage account where they've been held for quite some time. These are various dates. Most of them, I think, are 2010 or 11 or 12. So they've been held for a long time. The way these coins are packaged, all three of them are fantastic in that they come in thick plastic capsules to protect the integrity of the coin. They're some of my favorite. The Kookaburra and the Koala are coins that we don't see very often because really they typically trade at very high premiums to their counterparts. In this inflated premium environment, that's really not the case right now. In fact, they're really quite a good value and in stock. So we have a little bit in the way of the 10-ounce Koala, maybe 50 or 75 of those left, and that's about it. But several thousand of the 10-ounce Kookaburra, which is a bird, for those of you who don't know what a Kookaburra is. And they're really neat coins. You know, they're like a mini hockey puck. And then, of course, the kilo Koala. And if you really want to, you know, blow someone away with something really neat, the kilo Koala it's bigger than a hockey puck. It's heavier than a hockey puck. They're really, really amazing coin. You know, it's the biggest coin people have ever seen. And those are $5 over per ounce. Kilo, for people's edification, is 32.15 ounces. And of course, the 10-ounce coin is, you know, it's going to be bigger than just about any coin you've ever seen. The kilo is going to be 3 times the size. So really neat coins that I like an awful lot, don't see very often. But as you were saying earlier, most importantly, are in stock. $5 over on the kilo and $6 over on the 10, in stock for immediate delivery. And honestly, as good of something to bring to your listeners as I've had in all of 2022, in my opinion.
Well, ironically, it's been almost impossible to get sovereign minted silver coins. These are certainly unconventional in that they have the large size, but they are sovereign minted silver coins, legal tender status, face value marking, etc. So they are remarkable. They're not common, and they're available in stock, and that's also rare. So if people want to get them to ship quickly, remember, pay by bank wire.
Bank wire or cryptocurrency, and will indeed ship it immediately. So, yeah, thanks for having me, Dunnigan. I appreciate it. It's always good to be here. And in a world where so much is changing so fast, I'll look forward to chatting with you next week, Tuesday. I'm sure there'll be a lot to talk about.
Always glad to have you here on a weekly basis for this weekly market update, Andy. Thanks for coming on Liberty and Finance.
Always a pleasure. Stay well.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.